Wow. Okay, guys, welcome to Sunday's weekly outlook review for day traders versus. I wanted to kind of go over something real quick before we actually got into the charts. And this is going to be like, I'll give you my little AI tips and stuff like that or whatever. But it's not a new tool that I've been using, but it is a new tool, right? I want you guys to open up a Notebook LM account, and you can just go to this link and just type in Notebook Google LM right here. And I want you to do this because I just wanted to show you guys how I've been using it and some of the ways that I think you guys will be able to take advantage of it. So, like this, I'm going to use this video that we just were listening to, right? And this kind of gives you your own little knowledge base, right, of information that you might need. And we'll go to my home page. So like I have a couple of notebooks that I already created, right? I have one where I created like the discipline trader routine, the 415 trading model revision, 3 drive and IFVG model, daily trading bias, study guide, the 2022 mentorship. So I can, based off of all of my notes and stuff like that that I've captured, I got them inside of, I got the transcripts of all these. And if it's anything that I want to ask after I've collected this transcript, I can just go into this chat and just say, hey, what can you tell me about trading IFVGs, right? And based off of all of this, these sources, and it's going to be able to answer this question using all of the references that I've already given it, right? I can, and you can see that it's going to give back some very good detailed information about whatever that question was that I created, right? And I can also do things like mind maps, reports. I can do study guides, briefing documents, Q&A, timelines, or whatnot. I can even do an audio overview or a video overview where you can have this create a study video for you or a audio podcast for you. And I'll show you an example of one that I created. So, oops, let me stop this. This isn't it, but this one, right? So I had this create a video, right? This is what it looks like. Um,
All right, welcome to the Explainer. Today we're going to dive into something really cool, a system that's all about cutting through that daily market chaos. You know, the noise? It's about bringing some serious structure to your trading. So let's
and I'm gonna just kind of fast forward it a little bit.
can literally use every single day. Simple as that. All right, first things first, we absolutely need an anchor, a North Star for our trading day. You see, the entire model is built on having a high time frame directional assumption. Seriously, without this, you're just guessing. You're
Okay.
flying blind.
But this is just an example of some of the things, and then you can do an audio as well, where
Welcome to the Deep Dive, your shortcut to understanding complex topics. Today, we're diving into the often fast-paced and pretty intricate world of intraday trading. Our mission, to really unpack a specific structured approach designed to help you make sharper, more informed decisions quickly.
Exactly. We're talking about the 415 trading model. And our goal for this deep dive is basically to extract its core logic, walk through its, very precise step-by-step rules, and then bring it all to life with some practical examples.
Okay, and then this is just the means that I, think that would kind of help. I'm the type of person where I need to see it, hear it, write it, type it like a multiple times before I can like and digest it completely and make it my own, right? So another thing you can do is make, mind map this out. Like here's all of the examples. Like for this particular trading model that I'm just trying to make sure that I revise, right? My overall logic. key steps and checklists, trading filters, your daily review process, and some examples or whatever. So, and in each of these is just like deeper dives into that. Each one of these, and it's just like me, like this is what I would like to see in each level of this particular trading model. Like these are some of the things that I'm looking for. So I just, you know, thought that I would break it down into a better way so that I can understand it in a more streamlined approach, right? And just like we watched that video is about mindset, trading, execution, right? I'm gonna use this particular notebook, right? The Trader Discipline Routine for Peak Performance. This is a notebook that I created that I'm like trying to like come up with ways to be more disciplined in my trading, right? So I'm gonna add this link from YouTube from this session, right? Where Mark Douglas just went over, right? So first thing is what it does is it will summarize it here. Here's the link to the video itself. And then here's the transcript of it, right? So all 22 minutes and 56 seconds transcribed right there for me, right? And now that I got it, right, I can go in and ask questions about what he's mentioned in the video, right? So if I think he mentioned about you know, evolving pitfalls. What are some of the pitfalls? All right, what are some of the pitfalls, right? So already, right? The source highlights several pitfalls that traders can encounter, particularly when operating from a trade by trade perspective or neglecting crucial aspects of discipline routine. So this is basically helping me like process this video, the transcript a lot quicker, a lot faster, and I can use it in a more streamlined way, right? Because now I can also like if I want to, I can map it out. I can create a video about this topic. I can create an audio about this topic. I can map it out. I can create a study guide, a Q&A, or a timeline or a briefing doc, you know. Let's see what that looks like. And this takes a second for the video. Didn't quite, but here's the briefing doc right here. And this just kind of just gives you a rundown of everything that's mentioned in the video. If you wanted to go through this to kind of study or try to implement later on, like and one of the things is the PM market preparation starting the night before. Like these are just, you know, your morning routines, trading six, focus on execution and bias adherence. Like these are some things that you might know, but you know, I think it's just a good tool to kind of help you streamline a lot of things. Like I use this for just more than my trading, but like other things too, you know. But my trading, of course, is always gonna be the main thing. But I just wanted to go over that real quick. Nothing too fancy, but if you open up your account with Google Notebook LM, you can add individual sources. You can add Google Docs, slides, links. You can paste in just plain text. And the more here you see you can add up to 50 sources for this particular notebook, right? And then, once you have the sources here, you can start asking questions like, whatever you want to know regarding the source detail or the source information. So the one I was just working on was my 415 strategy. Um, and one thing I'm gonna probably talk about today is midnight opening candle. So we mentioned I mentioned that in when I was going when I was devising this 415 the 415 model revamp, right? And again, it's a midnight opening candle range is crucial element to the 415 strategy, and serving multiple purpose for establishing intraday bias, confirming setup, and managing trades, right? And basically the midnight opening candle, that is specifically the 12 a.m. candle, and you're just marking the high and the low of that candle and extending it out to 4 p.m., right? And that's kind of like, one of the confirmations that I'm looking for in my trading right now. So hope you guys got something out of this because I use it. I don't know if it's something you'll use, but I hope you gave it a hope you take a look at it. Cool beans.
Hey, quick question, Corey. Thank Nugget. This was amazing. I didn't even know about this, so thanks for sharing.
No problem.
No, number two, like let's say, I wanted to separate like something else I'm kind of studying myself is like manifestation and like really going after my desires and goals and stuff. Like if I wanted to separate, do I just go back here and create a new
Create a new notebook.
Okay.
And let's see, we want to do we'll get some sources later, right? We can change this to manifestation. I can't spell
Shoot, I'm not good at that's why I'm accounting.
manifestation and asking the universe to give. All right. And let's say we found in Google, well, here a couple things. We can discover, we can look for our sources that already are available by hitting this little discover icon.
Mm.
And I'm going to just copy the title into the discover. And we'll say, let's find sources that relate to the following topic. Oops, not what I meant.
Hana? पापा है नीचे ओके मेरी कॉल चल रहा है
All right, so this is what we're gonna do. Look for sources, right? How to speak to the universe and manifest what you want in 3 simple steps. Okay, cool. I like that one. I'm gonna uncheck all of them because I don't know which ones I want, right? 7 steps to manifest anything you want, including love or money, Oprah daily. I don't want Oprah. You guys might.
Yeah. No.
Or how to manifest according to neuroscience. That sounds
That's
interesting.
yeah, Birdie is good. Yeah.
How you can create the life you want, manifestation and meditation. Let's go with that one. I'm just gonna use these 3 to start, right? Okay. And then this chat is going to give you a full output of like whatever the sources that we created. And then, again, this is just discovered sources, right? Based off of whatever the prompt we just created, right? But you can also again add manual sources. You can use a Google Doc links and pasted text. Right? So if you found something, or like even if you let me see, what else do I have, right? So let me see. I'm gonna open up my notes. These are my personal notes from my phone, right? And we can, oops, let me close this out. These are my personal notes from my phone, right? So I'm just gonna type in here. I'm just gonna look for um anything that I've typed that has to do with manifestation. Um, all right, so here's something right here. All right, I'm gonna take this and I'm gonna add a new source. There's another source right here. This is from my own thoughts, right? And this got a YouTube too, so I'm gonna take this YouTube link and I'm gonna make that an individual source. And then we'll use that. So this is the equivalent of what you would be doing for as well, right? I master manifestation when I learn how to shut the F up, right? I know. Right. So, okay, so now we've built this out. Let's do a mind map and see what it can come up with out of these 5 sources. And then, also if I want to do audio, let's do an audio. We can customize it right here. I want to do a shorter one. And what do you want the AI host to focus on? You can, if you know this stuff already, you can say, hey, I wanted you to focus on, you know, ways that I can apply this during the morning, right? Let's focus on ways that I can apply these concepts on a daily basis. All right. And that'll be our little audio. Maybe we want to put that on while we're in the way to work, or whatever the case is, or while we cleaning up around the house. We got our own customized audio, or customized video that we could be watching that's based off of a subject that we are trying to master, right? So we got our mind map, right? So the art and science of manifestation, that's the one we just created. And let's see what it came up. Manifestation and connecting with the universe. 3 secrets to manifestation. Manifestation minds, meditation, neuroscience and manifestation, secret of secrecy and manifestation, other strategies and goal for attainment. Well, we come up with definitions, getting started, a lot of good information. Find a quiet spot for your distractions. All right, here's how we can start our meditation process, right? A step-by-step guide. Like I know Anna does a lot of meditating, so she probably know all of this stuff already. Um, so yeah, this is part of what it would look like. And then what maybe we want to create a Q&A. Like we might want to have some questions. We might not even know the questions we might need to be asking ourselves. So let's just do a Q&A because this will tell us, right? What is manifestation? How does it relate to the law of attraction? Great question. What are the key steps to effectively connect with the universe and manifest desires, right? Here we go. Like these are giving you the tools to kind of dig even deeper into a topic that you might already be interested in, right? And this is, you can share this too. So like if I wanted to share this with you guys, um let's go. I think I got Anna's. Anna, do I have your email in here?
Yeah, it should be there. Anamika.Srivastava. Anamika.
I don't know if I have it, but shoot it to me. Shoot me both of y'all email
Okay.
in the chat. I'll just share this out. We can all come together and work on this together if you want. That'd be cool.
Yeah, sure.
Tree, yes, copy link. Boom. Indiana. Okay.
This, wow. Oh my God.
Okay. So you guys should have it. So whenever you open up your account, just use that account that you just use, and then it'll give you access to this, And then if you want to, I can also share this one too. It's that 415 one right here. But I'm not gonna give y'all edit on this one. I'll give y'all view on this one. This will view. This one view. Okay. All right. So you got both of these. Okay. So that was just my quick, offer to, just give you guys some insight on what I'm doing right now. As far as like trying to get better, and like I said, trying to get better personally, trying to get better with my trading, all sorts of different things. So I just wanted to make sure I start out with that and just show you some of the, using the newer tools and things that you have the ability to, to make your life even better. Like I try to use technology to make things easier for me.
Yeah.
So this is how I would do it. So okay, now trade it.
So one more thing, like
Go ahead,
this
go
is
ahead.
your, sorry, this is your paid version or
It's free.
okay, okay.
It is free.
Mm-hmm.
This is free. All you got to do is sign up at Google at notebooklm.com.
Okay, okay.
This is the link.
Yeah. I already signed up, but I'm trying to.
I did that. There was one link like plans, so I didn't check that, but that's why I am asking.
Nah, you don't have to get the paid version.
Okay, okay.
Yeah.
Mm-hmm. Thank you.
You got in, you just don't see the notebook.
No, I see everything now. Like I added few things also. Just I'm asking, is this your paid version? Of means
Yeah, I just got
you do something, and after that it asks for a plan. Then
of course it's gonna try to get you to buy it, of course. But no, I just got the free version.
Okay.
You got it? You were able to sign up, Tree?
Yeah, I signed up when I had signed up before you shared the link. So I was trying to figure out how to get what you already sent us, but I didn't see it in my email. So I'll play around with it later. Dang it.
Yeah, that part I don't know what it looks like to share it out, but
Yeah, I didn't receive that too in my mail.
you if
So
you
I checked that spam also.
let me see if I share the link, and since you guys have it already, maybe it'll just open up. That's that one. That's that one. Did that help?
Yeah, this.
Now you can see it?
Yeah.
Okay, okay. Okay, cool. Cool beans. What about you, Trees? You can see it now?
Not yet, but I'm not gonna hold it up. I'll figure out what I'm doing wrong.
Even when you click on the link in the
Y-
chat.
Yeah, it's weird. It's taking me to security to open up Microsoft Windows. So I don't know what it's doing.
Okay. All right. Okay. Well, all right, let me pull up the charts. Okay. So far as this week goes, um we don't really have a lot of news this week. Um but we do have some big things that are going to take place though. Like Monday, we don't have anything but new home sales. We have Richmond manufacturing numbers, and we got GDP on Tuesday. So that might be our first catalyst on Tuesday. We don't have anything on Wednesday too big, but we do have Nvidia reporting. And that's really going to be the one we need to look at. That's probably the biggest news next week outside of PCE on Friday. So PCE and Nvidia reported. And then we got unemployment claims on Thursday, pending home sales, and then preliminary GDP. So we don't really have a lot of news per se, but we do have the Nvidia earnings, and then we also have Baba, which is Alibaba. That they're going to be reporting on Friday, but and before the market opens. So those will probably be our biggest thing. Our biggest catalyst is going to probably this week be Nvidia. And then if we look at it right now, they are, let me pull this up right now. They are, they're projecting Nvidia right now to come in plus or minus 7%. They are looking at Baba coming in plus or minus 8% this week. But the one we want to pay attention to is Nvidia, because if Nvidia right now, tech is leading all of the market right now. So we really don't really move the market without tech moving right now. So as long as Nvidia is going to be reporting, that'll probably be the biggest news for this week. So um, then let me go with the institutional orders. You got NQ kind of leading the pack right now. NQ's kind of leading the pack right now. Again, NQ is tech heavy, so that's kind of the reason why you seeing NQ lead. But you can see order flow coming out of ES. We had on the August 12th, we had a strong push to the buy side by institutions, and then they took something off up near these highs into profit, kind of probably profit taking. And then we saw the bigger banks starting to push up as they took these lows, and they started adding in buys here. So we probably will see continued buying this week. You'll see the same thing on NQ. with the institutions going on. But in Q, you can see they adding on in Q. So they were kind of pretty negative selling at these highs, and now they starting to buy near these lows as we get ready to take out. And you'll notice that we got the all-time high here on NQ. We didn't have, we already are sitting near the all-time high on ES. So as ES took out the high, takes out the high, we should expect for NQ to start pushing up as well. And then you'll also see YM, Dow Jones. Dow Jones. You can see institutional order flow is pretty going from 1,040 or 1 billion orders pretty much to about 3,200 near these lows. So we went from flat to up 3K, from 1K to 3K in order flow near these lows and into this buy. And you can see we took out all these highs with this move, and now we got a new all-time high. So usually what you see one do, you'll see the others do. So this is Dow making an all-time high. We should probably see NAS. Well, we'll probably see S&P happen next, and then we'll probably see NQ happen now that we see Dow already just took its high out. So that'll be what I'm looking for. Then this will be kind of reviewing what I'm looking for on gold. You can see dollar right here. We rejected this daily fair value gap on dollar already, right? And we tried to trade to it last week again, but we failed ahead of it, and which is okay because that was when Powell announced that he would likely be lowering the interest rate coming up in September. So that's going to be something that we need to watch out for going into this week and into next week, but mainly into next week and the week after that, because that's when the Feds will be announcing their interest rate, which the projections are a 0.5 to 0.25 to 0.5 percent rate cut. So we'll just kind of have to keep watching that. This is the Fed Watch tool. This Fed Watch tool has a 87% chance that we get a interest rate cut of from 2.5 450 area right now to be around 4 to 4 and a quarter. So right now we sitting at 4.5, and they're suggesting that we get 2 drops, 2 basis points taken off, which will put us between 400 or 4.0 or 425 or 4.25. So that's what they're looking at for the September 17th rate. The and this news pretty much the dollar reacted negative. So we have a weekly order block, and then we have this previous week low. I'm definitely looking at that probably for targets next week on dollar. And with that being the case, that means that gold should push up if we have inverse correlation between the two. So I'll be looking at gold coming deeper into this daily fair value gap, which is from this low to this high, and then covering this whole range. We pretty much at the middle of it right now, and I would want to see us come up to the high, and hopefully we can get a reaction off of that. If we do have a pullback, I can see us pulling back to this. Now this is an order block, so maybe pulling back to this order block. And that same area right there is the middle of this 4-hour fair value gap on gold. So that's lining up with, you can see it right here, where this is our order block. You can see the body of it is right around 33.65. And then you'll notice over here, 3365 sits around right here, which is just below the middle point of this 4-hour fair value gap. So that's what I'll be looking for us to do on gold. So if we go straight up, open gap, do all that stuff, first target, what I'm be looking for is this high from last week. That's one. And then I'll be looking for us to come to the middle of this fair value gap, the quarter point of this fair value gap, and then eventually taking on to breach the fair value gap and invert it. If we do drop, I'll be looking for us to come down into this fair value gap and see if we can hold around the middle of the fair value gap. And then I'll still be targeting the same areas for gold. So main setups are gonna look like this. This is the main setup where I would want to see us stay underneath and inside of this fair value gap. And then overall target would be here on gold. This is the main thing I want to see right here, where if we do trade down to the middle, not to say that this is going to be my entry, but this is where I'm going to start looking at price to respond. If I take the sell, I would if I take the sell into this, I would probably pass on the sell because I know overall this, if everything works out the way that the charts is telling me, this should be a bullish market. So instead of taking this sell, I'll probably just look to let this happen and then see if I can get my entries either. Let me broaden the range. So we'll be looking at this quarter area right here. So I'll be looking at anywhere between 33.76 down to 33.69 for entry on gold. If I don't take the sale, which I probably won't. If I take the sale, I'll be taking the sale knowing that it's just a if I take the sale, I know that it'll just be a temporary trade just to get down to this area and see how we respond. Right? On YM, it's the same thing. Like I mentioned before, we took these highs out right here, and we closed the day super bullish, right? Way above the previous all-time high. So again, probability says that price stays within this candle. And if we do come back down, we'll have to start going to the lower time frame to look for where we could come down into. And you can see we got a fair value gap on the 4-hour already. We got three stacked fair value gaps. So we could be pushing anywhere down from this high up to this low. Anywhere in between there's a fair value gap here, here, and here. So in this case, you might as well just draw all three of those together, with the low being 72. And then we'll go ahead and this is the 4-hour. And we'll go ahead and add in the quarters because the quarters since it's so large of a range, we need the quarters right now. But you got your quarter area here and quarter area here. And then you got your low, middle, and high right here. So I can see price pushing down into one of these levels. And then we get a response from there. But overall, the market is very bullish. So I don't know exactly how far we may want to come down. Let me go back to that. But if I had to guess, there's an inverted fair value gap right here. So with that inverted fair value gap being right here, I'm going to say that worst case scenario, meaning this is as low as I want to see it go, right? Could we go lower? Yes. Could we not go this far down? Yes. But if we do go lower to the downside, this is where I would want to see us hold up and try to get some buy-in from, right? So that's what I'll be looking for. Let me draw it out. So if we sell off, I don't want us to come any lower than this range. Once we start to buy again, you got obvious 46,000. But I would probably extend that to probably like 46,500 since we already came near there once. I would believe that we would probably try to catch the 46,250 area, which is right around here. 46,250 area. As the next target level. So if we come down, we will be taking down, holding probably near this, worst case down into the fair value, inverted fair value gap for some reason if we sell off. But if we push up immediately, I'm saying that we just gonna go straight to the 46.5, 46.250 area right here. So that's what I will be looking for on this. And you can already see probability says that we are likely, more than likely, to take out the previous week high right here. So I'm just going to assume that we'll go ahead and take this high out since it's so close. But this is our new all-time high on YM. And if we start to come down, you can see that same fair value gap right here. Nothing really in between this high and that high that's probably going to hold us up. So unless we get some buying higher for some reason, I think we go ahead and come down if we do get a retracement. So that's what that'll look like for YM for me.
Quick question, Corey. I know it's been a long time since I did the trading. So back in that fair value gap, you wouldn't trade it down. You would just wait for that potential buy, right?
It depends on you.
Okay.
Sometimes you can take the sell setup. If you get something that's clear and obvious, then yeah, you can take that sell. Especially in this case because it's so big.
That's what I was about that because we on a 4-hour and it was such a long trail down. So I was wondering, like, would you take that?
Yeah, you can because this one's pretty big, so you have an opportunity likely to take some sales into the downside, but you just have to understand that if I am taking this as a sale, I am going against the bias.
Yep. Yeah.
And you have to say like, all right, okay, I'm cool with 100 points or I'm cool with 50 points, you know.
Mm-hmm.
But I know that if I start to see rejection, then it might be time that we are setting up for the buy. So that's how you gotta look at that. On
you have to just take it and run away.
Was that?
In this,
take the win and get out.
Yeah, just take it and run away.
Right. That's exactly what you gotta do, man.
Mhm.
But if it put, let's say if it was going to buy a lot sooner than actually hitting the fair value gap, right? At that point, once it pushed past what's can you
I'll
was
go.
6?
Let me go back. So for me to buy it before we get a retracement, oh, this NQ. Hold on. For me to buy it before we get a retracement means that we probably need to be taking this high out.
Oh, yeah. Okay.
Yeah. And at that point, we need to see like something at or above this that says, hey, I can go ahead and set up for a new buy. Which in my book, I need to see a fair value gap that goes through this all-time high. Right? It needs to look like you see this high right here when it get taken out. There's a fair value gap right here.
Okay.
Every time you want to see like a new area, or you see how this little high right here, there's a fair value gap in here.
Mm-hmm.
That means that, all right, cool, I can start buying again. And if we pretended like this was like maybe like a 15-minute chart or something like that, after you either taking the break or you waiting for this to happen. And then you taking it from there.
Got it.
But anytime I see a high broke, like this one right here, let's say this one, there's a gap or something that I want to see made at or above the high so I can know we can continue. Because I don't want to just jump in because we just start buying,
Mm-hmm.
because that'll be a situation where like this one, this high right here, there's no gap. You see this one
Oh,
right here.
and then it just reversed on us.
Yeah, there's no gap, right? And we do get this gap to go through it, but once it comes back into it, it don't hold it.
Mm-hmm.
That's why you want to let this happen, wait for it to respond, and then take it. But in this case, you would have let it happen. Once it came back down, it soon as it get underneath this price point right here, it inverted it. And now this is sales setup because from this low from this area right here, 45.85, once we traded through it right here on this candle, you see what the next candle did. Let me get rid of this. I don't need this. You can see we would have been looking for this area to buy, right? And then you would have seen like once we took this high out, once we take this high out and we have this area below, price come back down into it, you like, okay, cool, price coming back down. It should hold inside of this range, right? Should hold at least at this area and then go up, right?
Yeah.
That's the at minimum, right? Since we got this, we can extend this out. We take this high, we make a new high, price should come back down into this range, hold it, push up higher, right? We don't see that, right? Instead, we see the opposite. We make a high, price come down into it, it trades below it, then trades back into it, and then we drop. That's an example of like what we would want to see to say if we should sell, right? If we gonna sell this high right here, we want to see something like this happen up here on some time frame. So we want to see price trade through the high, a fair value gap, a fair value gap failure, and then a sell off into this range down here. And then once we get in this range, we can be like, all right, cool. We start seeing rejection. Then we can look for a buy.
Got it.
Yep.
That was good.
Yeah. That's what we want to see. Same thing happened right here, right? We got high. If I can get it to do what I wanted to do. We got highs right here. We have a fair value gap right at it or above it. This one's a big one. This whole little range right here, right? But let's just focus on this one because this one actually took the high, right? Price took these highs, made a new high, tried to come back into it, traded below it, traded lower, traded underneath, use this high, use this to sell off, right? Came back into it again. Now we got a new fair value gap. So the next time we come back into it is using that fair value gap that we created. Now this one is a bearish one. This one a bearish fair value gap. So now this one got inverted. This was bullish. This was bullish at first. And we would have been looking for buys from here because we just took a high. But once we traded below it, you know it's not good anymore because you get this action right here. You get this candle, these two candles right here. They inverted. So now this is inverted. This no longer a buy area right now. That's sell. And you got a new fair value gap that's a sell. So if price come back in here, after we get this to confirm this is going to go down, meaning now this is the bearish setup. Once we get this confirmation right here, when we see this low get taken out with a body and these three candles confirmed, now anytime we come back into here, we can look for a sell, which happened right here and right here, and we sold off. And you would have been looking to take this low and these lows over here.
Mm-hmm.
But now
Yeah, projection there.
we got now we got this high right here that gets taken out, and they take it out with a fair value gap, right? So that's also the reason why I'm not looking for it to come all the way back down here, right? Because this high right here, which is an all-time high, it got taken out by this particular fair value gap. This one, from this low, from this high to this low right here. So really the main one I want to focus on is this area right here. This the main area. I'm just including this area because that is the last thing that got inverted right here. Now that it's inverted. So because that's inverted, now I'm like, okay, it could possibly come down in there. You know, if we do get a deep retracement, right? If we get a deeper retracement than expected. But overall, this is the area that took out this high. So a lot of the buying happened above, at or above this old high. A lot of the buying that took us above this high was triggered at 45,386. So that's why I'm looking like, all right, cool. We might not get a deep retracement. We might retrace somewhere into this range right here. So at worst case, we do come down into this range, but if we still gonna buy, I don't want to see us lower than this 45,175 area. So that's kind of why I'm picking that particular area right there as the low that I want to see. And again, all this could be out of the window, but you know, this is for me what I'm gonna be looking for. You know, and my setup will look like something along the lines where worst case scenario is here. I don't change my mind on this unless we take out this low. right? And this not the trade setup, but this is like mostly, because the trade setup might happen sooner than this, right? But for me, my buy, I want to take it from here. I can adjust my stop loss, once we get into lower time frame structure, right? So it'll look something like this, right? And you'll see on NQ and ES similar things that have happened, right? Because on ES and NQ traded to a bearish fair value gap, just like ES traded to a bearish fair value gap. NQ traded to a bearish fair value gap on the daily. ES traded to one on the 4 hour. So symmetry. We always got symmetry, right? And you always got to look for the symmetry in between all three of the indices if you're going to trade it. And especially like right now, that's the common theme that's been going on lately. Symmetry and divergence, right? And that's what I was really going to like talk about today, because that's a lot of what happened last week. And that's been happening, but it hasn't been like a main focus of mine. So right now, I'm about to like going into this next week. One of the things that I'm gonna be looking for is symmetry and divergence on each of the pairs, and especially between these two, gold, not gold, but S&P and NAS. Really, really going to be looking for symmetry on higher time frames and lower time frames, because that has been like really kind of almost bread and butter. And when I went back and back tested a lot more, it's like, man, a lot of my setups, I missed them because I wasn't paying attention to symmetry and the divergence between between ES and NQ. So on ES, we'll go and look at ES we can start from the daily, right? And I'm gonna just hide the drawings because you can see kind of what's going on, right? So on the daily, we had last week where we opened up and kind of sold off. Then once we sold off, we pushed all the way back up and we almost took out this previous week high, right? But we held right up under it. So this week, if we open up, worst case scenario I'm gonna be looking for is us to come down into this body right here, maybe into this gap right here on ES. But you can see on the daily, right, that still put us at an order block now. That also put us at, another order block right here. You will see that on the lower time frame. But still huge body on the daily. So the likelihood of us selling off is not that high right now, right? Because now this is now inverted and it's back bullish again, actually. Then this is a fair value gap right here that we traded above that got inverted. Now it's bullish. So if we sell off, I can see us coming down to this area, to buy again. And you'll see that now. Let me throw this back on, right? There's a inverted fair value gap on the daily right here. That's where I'm saying, like, if we're gonna sell off, we're probably gonna sell off down to around this area and then buy up again. Or if we just gonna buy, we just gonna go ahead and take out the last all-time high we made. And since we know, again, symmetry come into place, Dow Jones already took out the all-time high. So who got to do it next? Looks like it's going to be ES. ES the next one because it's close enough to the all-time high to take it out. And then the all-time high is at 6509, so pretty much 6500. So if we do take it out, where are we likely to go? We definitely going to 65.25 area, right? Maybe even 65.50 as a target, but just for now, 65.25 is cool for me, you know. So if we drop, we want to see price hold at the daily inverted fair value gap and then push up. If we just push up and go, we want to see price go ahead and take out this high and get to the 60.25 area. You can see it on the 4 hour as well. Same thing as we had on Dow Jones. We also got fair value gap here, and we got one right here that's huge, right? Same way, you know. The only difference as to why I didn't draw it on this one is because this inverted fair value gap is closer, right? So the probability of it using this is higher. And then we also have last week's opening price. So I'm just gonna look at this opening price and this inverted fair value gap. So I'm cool with not drawing it on there. But if I was, here we are right here. This is where we be looking at in this area right here. This is a 4 hour. These would be the levels right here. Let me make sure what's the low. 74, 74. These will be the levels, right? See us come below 64.74 into 64.51, 64.27. But what do we have at the middle? We got this inverted fair value gap right here. So we are probably not likely to drop below this area right here because of what I just mentioned, right? So it only makes sense for us to stay inside of this bullish fair value gap at this point since the market's so bullish. And then again, target being all-time high. The next area above is the 25 area. So that's why I picked those price points, because that's the only thing above it. So once we get in, if you want to sell off down into this, you got the all options too. Because if we sold off from where we are right now, you're looking at a good 46 points or 460 pips. However you want to look at it, that's a good move. Even if you only got 100 of those or 200 of those, that's still a good move, right? So you got a lot of room to the downside. But if price comes in here, let's say it only comes to the middle, and we come to the middle, that's almost 1,000 points or 760 points. So you got a better chance to get more points on the up move than you do on the down move. If it come all the way down and hold, now you're looking at almost still 880 points or 88 points, 880 pips as the potential for that move. So do you want the 400 down or do you want the 800 down? Up. You want the 400 down or do you want the 880 up? Which one you want? That's what you gotta debate on this. And which one seems like it'll be easier to catch? Is it easier to catch the 400 down or is it easier to catch the 880 up, right? Later on, I would want to see us come back down to this inverted fair value gap too, because there's one on the 1 hour that you'll see on the 1 hour, this one right here. This one got inverted right here. And then this one actually started the move up. At a later date, I'll be looking at this again. I'm just gonna leave this on the chart for now. But on a later date, I am gonna be watching this. To be a potential area that we come back to. And it might be like in the middle of next year that if we depending on how we trade the rest of the year. Like I don't know. but I am going to be looking at this one because that started this move, right? So that is ES. Then in Q,
That will be sale target, right?
was that
This inverted fair value gap, this will be sale target, right?
this one
Yes,
or
yes, yeah.
this one?
No, no, this inverted, you said you will take care of this, right? This is 20 August, 9, 9, yeah, this one.
Oh yeah, yeah. No, I'm looking at that, if we ever drop
Then,
that down into it,
uh-huh.
I'm definitely going to be looking at that for like maybe being a good area for a buy zone.
Okay, got it.
And it is inverted. Yeah. And
Yeah.
knowing that we just started this move up from there.
Yeah.
Yeah. So I'll be looking for that.
Mm-hmm.
Same thing on NQ. Again, symmetry is important because this is the 1 hour chart, right? And it's the same one right here. And there's that same inverted fair value gap that started to move. But you see, like they do similar things, but they do things just slightly different, right? Everything moved the same, but it might be an order block that did it on ES, and it might be a fair value gap that did it on NQ, but they doing the same thing, right? So just like, on ES, we traded to a fair value gap. We traded to a 4 hour one on ES, and now we trade into a daily one on NQ. And before I do this, let me go to the daily. I'm gonna start at the daily. So let's look at all three of them real quick, just to see the difference, right? This is Dow Jones. That's the old high we took out. This is the new high. This is NQ. We don't take out a high on the all-time high. We don't take an all-time high out. We took out a previous day high and we sit inside of the fair value gap. But our all-time high is here, right? This is ES right here. This is S&P. We didn't take out we didn't take out the all-time high, but look how close we are to taking it out. So ES right now is closer in line to Dow Jones. So the probability for ES to follow Dow Jones is higher than it is on NQ. So now that Dow Jones took out his all-time high, I'm going to assume that ES is going to do the same thing at some point in the near term future, right? And then if we get S&P to take out the high, that's when we can start looking at, okay, NQ probably going to do the same thing since we already had this one do it, then we had this one do it, now we're going to have this one do it. So that's when we'll be like, all right, as soon as we see ES take out the high, within the next few days or weeks, we should be looking at NQ to do the same thing. And then all three will be fully in sync, right? All three will be doing the exact same thing, right? So that's why you want to kind of pay attention to it from this type of perspective. And then you can also see the same thing, right? ES moved from an order block right here. The low it made was at an order block, and then we pushed up. The low we made on NQ was also at an order block, but there's probably something on this lower time frame, or maybe even the higher time frame that moved that up. But something moved NQ up. You can see clearly a fair value gap moved Dow Jones up. So they might not be the same thing, but it is something at those particular areas, and that you got to keep in mind. So back to
So, Core, is that what you call symmetry?
yep,
Okay.
yep.
Are
This
you
is
going to talk about divergent or
yep.
you?
Yeah,
Okay.
I'm gonna talk about it.
All right. Perfect.
Yep, yep. I'm gonna talk about it because I'm mad that I wasn't like fully dialed in on this when I've always known this, but I don't think I've used it to its full potential.
Mm,
Symmetry. Like I've known about symmetry for years and years now, but it's just not using everything. It's like, when you're supposed to use things and what things matter more than others, right? You know, and I think that I'm having clarity on those type of things at this stage right now. So just like we had, again, we got the daily gap that we trading into. We just took out 2 days worth of price action and we got a strong bullish candle. Probability of us going lower is low. We'll probably take out this high before we take out this low. So that's kind of how you get your full bias, right? 4-hour candle chart. There's that inverted fair value gap from the 1 hour right here. That's probably going to be where we come down to, right? In Q. We even got a breaker right here that we could probably come hold down into too, right? But either way, we'll likely invert this fair value gap and use this to trade higher up into the market, right? If we decide to go higher. Again, same thing. You do have a downside sell if you want it. But overall, me looking for something like this is what I'm going to be looking for. I don't want us to come below that. I want us to go ahead and start pushing up higher, at least into this previous week high right here. And then eventually like to see us take out this high, right? So let's go to 1 hour. You can also see there's that inverted fair value gap again. That's where this move started that pushed us up here. That's why I'm thinking we could come down into this again, but I want to see us hold and then start to push up. If we don't push down, it'll be similar as mentioned before. We should gap through this high. We should see that we start to see price action hold above the middle, which is 23,604. We shouldn't see a lot of price action below this area right here, and then we should start seeing closures above 23,718.75 and so on. So this will be what I'm looking for on in Q. So that was gold, NQ, YM, ES already. Now, here is the study part. The study part for you and me and Anna and all of us, which some of this stuff I already talked to you about, Anna, but midnight opening candle.
Yeah.
Just go on the hour chart,
Mm-hmm.
draw a box around the midnight opening candle from the high to the low and extend it out to 4 p.m. And I want you to pay attention to that for the rest of the week, for the rest of the month, for the rest of it. You'll notice we get a lot of setups off of that range where you can see Monday, we sold from there, came back Tuesday, made the midnight candle, we sold from there. This Wednesday, midnight candle, we sold through this, came back to it again, tried to sell off again, but we didn't. But the main drop was when we took out the midnight opening candle. The midnight opening candle right here, even though we consolidated most of this day, the biggest move you would have caught was off of the midnight opening candle. There is other things you need to consider with that, but if you can just notice and pay attention to that, then that'll be like a big key to getting your bias, right? You can see midnight opening candle here on on Friday. The move actually bounced clean off of the midnight opening candle range and then shot up. Friday, I'm not gonna say this. I'm not gonna let this live on, but I was a little pissed because of what happened Friday. I was trading. I wanted to trade on Friday. And here's where the divergence come into place, right? On the higher time frames, you can see that we had I'm gonna annotate this. There's a low here. There's a low here. That's your S&T divergence. That's ES made a low, NQ made a low. There was a high here. There was a high here. ES made a high, NQ made a high. There was a low here. There was your low here. ES made a low, and Q made a low. And Q made another low, and ES made another low. What do you notice difference about these lows that were made on NQ and ES? This is NQ, this is ES. Just simple. The low that NQ made was a bit more shallow than it was on NQ on ES. Let me draw that. The low we made over here, which I am going to draw with this. This is the low we made on NQ.
Mm-hmm.
Let's make a big body low. That's our low we made on NQ. The low we made on ES, that one,
That was I consider that as a relative low.
Yep.
It was not a SMT, right?
yep, relatively equal lows right here.
Mm-hmm.
So if I'm seeing NQ fail to make the same kind of move, that's when you want to notice divergence right here, right? And you see that in ES is making equal lows, NQ is making swing lows, right? You got a
Mhm.
swing right here. It's kind of like not as deep as the low that ES made, right?
Mm.
So I'm gonna clear this off because that's lining up with higher time frame, right? That's lining up with higher time frame. Now, if we go to this move on Friday, right? We're gonna go to the 15-minute chart. We see already that ES and NQ, ES is making flatter lows, right?
Mhm.
NQ is deeper, is running his lows a little less deeper than ES is, right? But look what happened, right? Midnight opening candle, midnight opening candle. Let me zoom in a little more. Midnight opening candle, midnight opening candle. That's the blue shaded box, right? And actually, let me go 5 minutes on this and see it better. Okay. And we're going to go candle for candle. Okay, so 9:30, right? 9:30 candle open. What does ES do and what does NQ do? ES dives into midnight opening candle
Mhm.
and rejects.
Yeah.
And we create an order block, right?
Yeah.
ES, this the low before pre-market, right?
Mhm.
ES does not dive into the midnight opening candle range, right?
Yeah.
We do create the order block, but we barely even trade into it because that's a sign right there that we got divergence going on, right? If we see ES, if we see NQ diving into this and it's coming back into this, but we don't see ES doing the same thing, it probably means that this is going to run from where it is. This is already responded to where it's going to need to respond to. And if ES not going to follow, you can probably take the trade from where it is right here.
Mm.
So you see, you got symmetry, you got divergence between both, right? Both made an order block right here at 9:30. Both made an order block, but out of the two, NQ got the better setup because NQ has done what we expected it to do. We expected price to go into midnight opening candle.
Mm-hmm.
Out of these two, I should have been trading NQ. I was looking at ES because I was thinking that when we made this move down, I was thinking, well, maybe we still come into the midnight opening candle.
When you consider the S&P, then sometime it comes in the mind, right?
Yep.
When you are in live, then like because Nash dive down till that midnight opening candle, right? So
Mhm.
maybe your expectation is that S&P will also do same thing, and then
Yep.
it will go up, right?
Yep. That was my expectation. That was exactly what I was thinking. I was
Mm-hmm.
thinking that because we had done it here on NQ,
Mm-hmm.
that we should do it on ES as well. And it did
Exactly.
do it. And it didn't do it. And
Mm-hmm.
that's why I missed this trade because I was only looking at ES to say, hey, come down in here. But let me show you one other thing. Let me show you who else was involved. And this is why you gotta pay attention to all of your three pairs, right? Who does ES look more closer to? Right,
Right.
this YM right here, right?
Yeah.
Right.
And this is our midnight opening candle.
Mm-hmm.
It didn't even come
Yeah,
back.
come into it. So now we can already see why I missed the trade. Why we missed this trade is because ES was following Dow at the time more so than it was NAS, right? We made an order block on ES, made the order block on NQ. The 9:30 candle on Dow was all the way up here. So
So you
this
were not looking at NQ that time, or
I was only looking at NQ and I
no, no.
wasn't looking at YM.
Okay.
I wasn't looking at YM. If I had a saw YM, I would have noticed.
Mm-hmm.
All right. YM is a lot further away at 9:30. You know, at 9:30, YM is way far, a long way away from this midnight opening candle. So we probably not coming back into this candle. And I would have seen, okay, cool. We are probably following YM on ES.
Mm-hmm.
So I know to not look for price to come back down into midnight opening candle. I could probably take it from up here somewhere. Or I can not take ES at all and I could just focus on YM.
Yeah,
Because
exactly. No, no, sorry, NQ, right?
yeah,
Because
on
N-
NQ.
NQ was has a if you are not looking at anything. So suppose you are looking for S&P and MNQ, then MNQ has better setup, right?
Q
So
had the better of the setups.
yeah,
NQ was the only one that did what we thought it would have done, right?
exactly. Mm-hmm.
Because even if you don't get it at midnight opening candle, what happens right here? You get the order block, you get confirmation, you get a fair value gap. Let me zoom in on NQ. Even if you miss it, right? And it's nothing wrong with missing this first drop down because you get the order block, you get price trade above it, you get a fair value gap, you get it take a high taken out. If you want to trade it off of the fair value gap, you would have been looking at this. You would have been looking at a setup from any one of these levels with a stop loss below this low, right? Anywhere inside of here, stop loss below this low, you got an easy 40-point stop loss. And you taking this anywhere you want to take it at this point. You take it up to here. You take it up to here, however you want to deal with it, at that point, because you got such a good entry, you know what I mean? And again, you already expecting, okay, we traded off of this. We see the other two not coming back into it. That means it'll probably respond to this level. I can take it from here and go with it, right? Worst case scenario, I just put a buy stop above this high right here, and then I just let it go, right? And then I use this still as a stop loss, right? The other thing, which also pay attention to, right? This go into 415, which I didn't taught y'all before, but again, it's something that I know that I ain't been using like I should. And now that I'm seeing like a lot of the lower time frame stuff is real choppy, focus on 3 candles, right?
Mm.
The 3 candles you're going to focus on are 2 a.m. candle, 6 a.m. candle, and 10 a.m. candle. These 3 candles. These 3 candles are the candles that move most of the price action in the market. There will always be exceptions, right? But these 3 candles, what I'm starting to do when I come in, sit down in the morning, what I'm going to add on to my, preparation is I want to know the low of the 2 o'clock candle, and I want to know the high of the 2 o'clock candle. And then once I know the low and the high, I want to go ahead and see what's inside of the low and the high. That's in this case, the high was of this candle was here, the low of the candle was here. Inside of that candle, we had midnight opening candle range, right? If we go down lower, 15-minute, we got small little inverted fair value gap here and one right here. This is stuff you can use to set up for the rest of the day, right? And then, once you get the 6 a.m. candle, the 6 a.m. candle includes the 9:30 opening and any kind of news. So in this case, the 6 a.m. candle low was right here, and the 6 a.m. candle high was right here. So now going into the next candle, the 10 a.m. candle, your logic is we already know that we had the high and the low of the 2 a.m. candle here, and then we had the high and the low of the 6 a.m. candle here. If we don't take this low out, we probably gonna be bullish.
Mm.
Easy way to get your bias right there, because we probably gonna be bullish at that point because we'll probably stay within either the 2 a.m. candle or the 6 a.m. candle. And in this case, the low of the 10 a.m. candle was inside of the 6 a.m. candle, and then we went ahead and took that out.
And Core, just to confirm, we do that on a 15-minute, right?
No, you're doing this on the 4-hour.
Oh, I do it on a 4-hour.
The reason why I call it 415 strategy is because you're getting those 4-hour candles from the 2, the 6, and the 10. That's where the 4-hour part come in. The 15-minute chart comes in because you're going to get your setups from the 15-minute chart and below.
Got it.
So that's where you're going to get your entries from, anywhere from those charts. But primarily, you're going to get your low, high from the 4-hour charts from those 3 4-hour candles. And then you'll get the entry setups from from the below candles. And you can see another example right here. You had 2 a.m. candle right here. You had 6 a.m. candle right here. And then you had 10 a.m. candle right here. If we go to Thursday, and we probably don't even have to do nothing but go to the 1 hour, right? let me see. Low of Thursday, 2 a.m. candle was at 23,300, 23,315 area. The low of the 10,
Different one? That is different one, yeah.
I'm sorry, the low of the 2 a.m. candle was here.
Yeah.
And that was at 2390 area. The high of the candle was 2367 area, right?
Mm-hmm.
The high of the 6 a.m. candle is inside of the 2 a.m. candle body, right? That means that we responded some kind of way inside of something that's inside of this candle. This high is at some given level inside of the 2 a.m. candle. And all we got to do is just go down and see what it is, right? Which is the midnight opening candle right here. Our high was here. That 6 a.m. candle high was here. And then the 10 a.m. candle was still inside of the 2 a.m. candle. That high was right here. And then we just sold off. So you would have had the opportunity to sell on the 7 candle right here all the way down, or you would have had the opportunity to sell from this 10 a.m. candle opening up, pushing up, then dropping all the way down.
Mm.
Repeating it again right here. That was Thursday. Wednesday, right? Wednesday was here. This is the 2 a.m. candle. The low is here. The high is here. The 6 a.m. took the high, right? The 10 a.m. candle traded up into the body of the 6 a.m. candle, sold off, and then pushed back up. But before you catch this, we probably had a setup up here, and then we might even had a setup at around here on the 10 a.m. candle. So we go down to the lower time frame. We know our low for the 6 a.m., the 2 a.m. candle is here. Then we see that we get the high of the 6 a.m. candle is here. We get the midnight opening candle range here. There's probably a setup somewhere around here we probably could have took, because I think there was symmetry. There was divergence on ES and NQ right here. But if you ain't in this cell, let's go down lower. Let's see if we would have got anything on the 15-minute. Okay, this is that candle high. We would have had fair value gap. They got inverted right here. And we could have been looking to sell anywhere below here. There's probably a order block and fair value gap that's right here that we probably could have sold from too on like the 5-minute or something like that. But this is probably the biggest thing right here on the lower time frame that would have got us into this before. But I couldn't trade this because I was at the office. But when I was looking back at it, I know there was a 5-minute or 1-minute fair value gap and order block up here. And then their reaction was right around here at 9:30. And you can go back and look at that and see it. But I know it's there. It's on a 5-minute or the 1-minute chart. Then you got Tuesday. That was Wednesday. You got Tuesday right here. Tuesday was the big sell-off all the way up here. Two a.m., 6 a.m., 10 a.m. 2 a.m. set the high. 6 a.m. stay inside. 10 a.m. gives you a continuation. So if I got the high of the 6 a.m. candle, which is this high, the low of it is right here. What's inside of that body at this on Tuesday? Midnight opening candle still inside, right? So here we are right here, right? There's probably also on the lower time frame, there's a fair value gap right here that got inverted where we probably could have got an 8 o'clock or a 9 o'clock set up off of. But even if we don't get that, here's your 10 o'clock candle already below this low and already below midnight opening candle range. You can take a setup probably somewhere inside of here or inside of here already. If we go to 15-minute and we look and see what's over there. 15-minute. Here's a 845 fair value gap right here to the downside with a 930 entry. Here is a 930 fair value gap right here with a 10 a.m. entry to keep going lower. But soon as you see the midnight opening candle range, that's a high probability setup anyway. Soon as you see us trade below that, we can already kind of start getting the setup off of that anyway, because that's a good area to get off of. You just got to be, in this case, you would have had to put the stop loss above this high or this high. In worst case, above this high. And then Monday, same exact thing. Monday was a little janky. Monday was actually a ranging day. It worked on Monday, but you just would have been janked around because all of this up and down on the 4-hour means that it looked even worse on the lower time frame. And I actually tried to trade Monday. I was in a good trade, but I just held on to it a little too long. But here is, let me go back on Monday. There's your 2 a.m. candle is this one. We already kind of leaning to the downside, right? Because it is the way the 2 a.m. candle is, right? 6 a.m. candle is this one. We trade up into this and we actually make a fair value gap. So that's actually where I should have been looking. I didn't, and I missed that. But, and then the 10 a.m. candle, all it does is it opens up down here, trades all the way back up. It take out the candle from 6 a.m. and trade into this fair value gap and then sell off. I missed this fair value gap. I would have probably took it off of that, but I had already got in the sale when we made this 10 o'clock high. I mean, the 6 a.m. high, and then I already had sold it, but I just didn't close out. That was my bad. So I end up breaking even on this trade for no reason when I should have just took my money. But same situation. Inside of that 2 a.m. candle, we had the midnight opening candle, and we had this fair value gap. And then this is the 6 a.m. high. This is the 10 a.m. high. You had the opportunity to sell from the low of the fair value gap to take out this high, this low right here. And that would have been the best scenario of them all, because we end up eventually trading back up. And, you know, even if you had stayed in it, but you even had a setup later on where, you know, you trading it from this area right here, and then you would have got the setup from the next day. But that's kind of how I want y'all to look at it, you know. And then you can see the symmetry at the same time where all of this that we talking about on this chart is happening the same on ES and Dow Jones, but just a little different. Okay.
No, that was good.
Yeah.
Thank you so much for this.
Yeah. And I remember that it kind of started as you was talking through it. It started to ring a bell for me. So
yeah, we all have went over this before plenty of times. It's just, why haven't we been using it is the question that we gotta have to. And like
And
now,
you were learning more and more and more. So one thing after one thing, then one after one. Now you are in that phase. You are deciding which one is working better for you, right?
yeah.
So I think that's it. Otherwise, we were doing this SMT divergence. I think in 2022, right? We were doing that.
Mm-hmm.
yeah.
Mhm.
And it's just been sitting there all this time.
Yeah.
It's, you know, I think that because we got a lot of manipulation going on,
Mm-hmm.
This is more so something that we need to focus on because a lot of the lower time frame stuff is looking real crazy. And I'm talking about sometimes even the 4 hour chart look like a 1 minute chart, right?
Yeah.
So
Mhm.
instead of trying to get everything off of that chart, going to the 4 hour will help alleviate some of that
Yeah.
and just focus on those ranges. So that's the logic behind this. So cool beans. All this recorded.
Mm-hmm.
I recorded all this. If you want to go back and watch it, I'm gonna put it on YouTube after it finished uploading, and then I'll put the link. I'll send
Yeah.
out a link,
Mm-hmm.
or you can just go to my page and just get it off my page. It's already well, I take that back. I don't publish them, so I'll just send it to y'all.
Okay. Thank you.
Yeah, I was trying to some of your older videos, and I was like, oh, that's right, he don't publish it.
No, no.
One day you're gonna turn this into a true training course and a book.
I'm gonna turn it into.
Amen. Amen.
I'm gonna start charging, man. I need to.
You really do.
I just got to get my accounts back funded and everything. Then I'll go ahead and do it.
Mhm.
Yeah, because I mean, it's all there.
Yeah, it's just going through all this stuff physically has been a challenge. But oh, hold on, my bad. Just trying to get back on the horse, man. It ain't the easiest thing. So
Yeah, but hats off to you. You are managing